As the week ending on February 28th comes to a close, we have some exciting breakout stocks to discuss. But before that, let's take a quick look at how the overall market performed last week. Nasdaq Composite down 3.8%, S&P 500 down 1.2%, Dow Jones slightly up 0.8%, Russell 2000 down 1.7%. The market has been showing weakness for the past 2 weeks, and it could have been even worse if not for Friday's inflation data, which met expectations and helped stocks recover slightly before the close. Now, let's dive into the breakout stocks for this week. But a quick reminder, this channel and the stocks discussed here should be treated as screeners for identifying key levels, not as investment advice. Coming up at number 1 today, we have Ameren Corporation, AEE. This stock has given a horizontal breakout on the weekly time frame. As you can see on the screen, this stock made a high of around $100 back in April 2022 and has been trading below that price ever since. However, this week, we finally got a breakout, which means the stock took approximately 2 years and 8 months to break above its previous high. That's a significant amount of time before breaking out. Looking at past price action, we can see that after hitting its all-time high, AEE saw a historical dip of about 32%. If we calculate the same percentage move on the upside from the breakout level, it would come to around $132. This is not a target, but just something to keep in mind. The stock is currently above its 50-day and 200-day exponential moving averages, EMA, which is quite common when a stock gives a horizontal breakout while making a new all-time high. However, one thing to note is that volume does not show anything remarkably significant. It has remained steady over the past 3 years, and even now, there isn't a major volume spike. So volume is not the area where something drastic is happening. That covers AEE. Keep it on your radar and decide based on your own analysis. The company we just discussed is Ameren Corp, ticker AEE, operating in the utilities sector, providing electric and natural gas services. Their business includes Ameren, Missouri, Ameren, Illinois, and Ameren Transmission. Founded in 1902, they are headquartered in St. Louis, Missouri. Now for the financials, AEE has a market cap of $27.41 billion, with $7.62 billion in revenue and $1.18 billion in net income, giving a profit margin of 15.51%. The PE ratio is 22.97, EPS is $4.42, and the dividend yield is 2.64%. The second stock on our list today is another horizontal breakout with a very similar pattern to what we just discussed. This is American Electric Power Company, AEP. As you can see on the screen, I have opened the weekly time frame chart, and it looks quite similar to AEE. This stock previously made a high of around $105 back in February 2020, meaning it has been trading below this price for 5 years, until this week when it finally broke out. However, what makes this stock interesting is that it has attempted to break out multiple times in the past and failed. Specifically, in April 2022, August 2022, August 2024, and September 2024, the stock tried to break out but could not sustain above the level. Finally, in the last week, we got a confirmed breakout. Now, the only concern I have here is the selling pressure that we are seeing at the higher levels. If you look at the breakout candle, there is a significant wick that has formed at the top, which suggests that there was some selling pressure when the stock tried to move higher. This is something to keep in mind because we don't want to get caught in a fake breakout. That being said, if you do decide to enter, the current market price is still very close to the breakout level. That means your risk, or in case the breakout fails, would be limited to around 4 to 5%, depending on your risk appetite. If we calculate the historical dip that AEP made after reaching its all-time high, it was approximately 38%. If we apply the same percentage move on the upside from the breakout level, it comes to around $145. Again, this is not a target, but just something to note. So overall, very similar story to AEE. Keep an eye on this stock as well and make your own decision based on how the stock behaves in the coming sessions. The company we just discussed is American Electric Power Company, Inc., ticker AEP, operating in the utilities sector, focusing on electricity generation, transmission, and distribution. It has four main segments: vertically integrated utilities, transmission and distribution utilities, AEP Transmission Holdco, and generation and marketing. Founded in 1906, it is headquartered in Columbus, Ohio. AEP has a market cap of $56.55 billion, with $19.92 billion in revenue and $2.97 billion in net income, giving a profit margin of 14.9%. The PE ratio is 18.98, EPS is $5.59, and the dividend yield is 3.41%. Continuing with the next stocks on our list, the third stock we have today is ticker symbol CCU. This stock has also given us a horizontal breakout, and since we've already discussed similar patterns, I'll just highlight the key points. CCU previously made a high of around $13 back in December 2023 and has attempted to break that level twice. The first time it was not successful, but this time in the past week, the stock has finally broken out. It took approximately 1 year and 3 months to break out, and the current market price is around $14. That's all for CCU, nothing more to add since we've already seen similar setups. The company we just discussed is Compañía Cervecerías Unidas SAADR, ticker CCU, operating in the consumer defensive sector, focusing on beverage production. It has 3 segments: Chile, beer, soft drinks, and other beverages; international business, beer production and distribution in Argentina, Uruguay, and Paraguay, and wine. Founded in 1850, it is headquartered in Santiago, Chile. CCU has a market cap of $2.58 billion, with $2.7 billion in revenue and $138.82 million in net income, giving a profit margin of 5.13%. The PE ratio is 18.57. EPS is $0.75, and the dividend yield is 3.02%. Moving on, the next stock on our list is MPAA, Motorcar Parts of America. Again, this is a horizontal breakout on the weekly time frame. The previous high for MPAA was around $10, made back in July 2023. After approximately 1 year and 8 months, the stock has finally broken out in the past week, and the current market price is around $11. One important thing to note here is the wick formation on the breakout candle, which suggests that there is some selling pressure from the top. This is similar to what we saw with AEP. Apart from that, nothing else to add. If you're considering trading this stock, do your own research and make a decision accordingly. The company we just discussed is Motorcar Parts of America, Inc., ticker MPAA, operating in the consumer cyclical sector, specializing in automotive parts manufacturing and remanufacturing. It has 3 segments: hard parts, alternators, starters, wheel hubs, and brake-related products; test solutions and diagnostic equipment, testing and software solutions for electric vehicles; and heavy duty, replacement parts for heavy-duty trucks, marine, industrial, and agricultural applications. Founded in 1968, it is headquartered in Torrance, California. Now for the financials. MPAA has a market cap of $211.51 million, with $753.73 million in revenue and negative $17.41 million in net income, giving a profit margin of negative 2.31%. The PE ratio is not available, EPS is negative $0.9, and the dividend yield is not available. The next stock on our list is ORGO. Although this stock has a similar horizontal breakout pattern to the ones we have discussed earlier, this one is different in a few key ways, which makes it an interesting case. First, this company recently announced its earnings results, and the market reacted extremely positively. As a result, ORGO skyrocketed by over 100% in a single day. Yes, you heard that right. It doubled in value in just one trading session. Now, if you're someone who likes taking risks, or if you have some money that you would not regret losing, then this stock might be for you. It is a high-risk, high-reward play, almost like a gambling setup. Switching to the monthly time frame, we can see that ORGO has a history of delivering massive gains. From November of 2022 to April of 2021, which is a period of about 5 months, this stock rallied by over 550%, which means it moved 6 times its value. However, after making that high, the stock also collapsed by over 90%. This is why I say this might not be the best trading or investment opportunity. Instead, it is the kind of stock where you either double or triple your money, or you lose it all, and you should be okay with either outcome. Switching back to the weekly time frame, ORGO made a high of around $4.50 in July of 2023. It attempted to break this level in January of 2024, but the breakout failed. It tried again in November of 2024 and failed again. But this week, the breakout is massive. One key difference here is the volume. The volume spike this week is insane. It is the highest seen in the last 3 years. If we zoom out a little, you can see that ORGO is facing resistance at around $6 to $6.50. This could act as a potential barrier. If ORGO breaks this resistance successfully, then there is no immediate resistance in sight. However, this is purely speculative, and I cannot even suggest a target price for this stock because it is completely unpredictable. This setup might not be for me, but if you are someone who likes to take a chance, then keep ORGO on your radar. Just be mindful of the risk, and if you decide to enter, make sure it is money you're comfortable losing. The company we just discussed is Organogenesis Holdings, Inc., ticker ORGO, operating in the healthcare sector, specializing in regenerative medicine. It develops, manufactures, and commercializes products for advanced wound care, surgical, and sports medicine applications. Founded in 1985, it is headquartered in Canton, Massachusetts. Now for the financials. ORGO has a market cap of $780.76 million with $455.04 million in revenue and negative $7.38 million in net income, giving a profit margin of negative 1.62%. The PE ratio is not available, EPS is negative $0.06, and the dividend yield is not available. With so many horizontal breakouts already discussed, let's shift our focus to a few stocks that have broken out of a downtrend. The first one in this category is TAKE, which is Takeda Pharmaceutical Company Limited. The chart I have opened is on the weekly time frame, and you can clearly see that this stock has broken out of a well-defined downtrend. To highlight some key points, the downtrend actually started on the 8th of May, 2023, when the stock made a high of approximately $17. Since then, it has been trading in a clear downward channel. In September of 2023, it made an attempt to break out but got rejected near the trend line. Then, in August through September of 2024, it made multiple breakout attempts over a period of 2 months, but failed again. After that, it took a significant dip before regaining momentum. This past week, the stock has finally managed to break out of this downtrend. So overall, this is a good downtrend breakout setup. A few things to keep in mind. Although the stock is moving up and trading above its 50-day exponential moving average, it is still below its 200-day exponential moving average. Coincidentally, this 200-day EMA aligns with the next major resistance level at around $15. So $15 is a key level to watch, both as a technical resistance and as a price-based resistance. So that was the first downtrend breakout stock on the list for today. Keep an eye on it and factor in these resistance levels while making your trading decisions. The company we just discussed is Takeda Pharmaceutical Co. ADR, ticker TAK, operating in the healthcare sector, specializing in the research, development, manufacture, and sale of pharmaceutical drugs. It operates through prescription drugs, consumer healthcare, and other segments. Founded in 1781 by Takeda Chobe, it is headquartered in Osaka, Japan. Now for the financials. TAK has a market cap of $45.69 billion with $30.22 billion in revenue and $1.36 billion in net income, giving a profit margin of 4.51%. The PE ratio is 33.89, EPS is $0.43, and the dividend yield is $0.62, 4.29%. The next downtrend breakout stock on the list is AMH. I have pulled up the chart on the daily time frame, and you can see that the stock began its downtrend on the 16th of September, 2024. After staying below the trend line for almost 5 months, It finally gave us a breakout on the 27th of February. Currently, it is trading at the $37 mark. This is a very similar pattern to what we have already discussed, so there isn't much to add except for one key point. After the breakout, the stock has rallied significantly. Ideally, it would be best to wait for a pullback. If the stock comes back to retest the trend line and shows signs of bullishness, meaning the trend line starts acting as a support, then that could be an ideal entry point. Right now, the stock has moved quite a lot, making it more susceptible to a pullback. Speaking of pullbacks, if you are interested in stocks that have already given a breakout and are now pulling back to retest the trend line, we have two such setups. The first one is MNSO. I have pulled the chart on the weekly time frame, and you can see that this stock was in a downtrend for quite some time. It gave a breakout in December of 2024, and after an initial rally, it has now come back to the same trend line. This past week, it closed with a green candle, indicating that the trend line is acting as a support. This setup looks ideal for a breakout, a retest, and a continuation of the upward move. The second stock is DVN. I have pulled up the chart on the daily time frame, and you can see that this stock has been in a prolonged downtrend for almost 1 year. It gave a breakout, then pulled back to the same trend line, which is now acting as support. This is a classic setup where a stock first breaks out, comes back for a retest, and then shows signs of support. The advantage of such setups is that if the breakout fails, the stop loss remains minimal. That wraps up all the stocks we have discussed today. I believe we covered a total of 9 stocks, all of which are at very critical levels. Keep them on your radar. If you found value in this effort and the quality of analysis I bring, do consider subscribing to the channel. Also, drop a comment on the video, as commenting in particular helps boost the reach of the video significantly. That's all for today. Have a wonderful weekend and happy trading in the coming week. I'll see you in the next one.